wonder why the stock market behaves like a roller coaster? Why do experts predict crashes and booms and still get it wrong? Well, today I'm going to share a shocking secret that can completely change how you view investing forever. Let's dive into it. Most people think that the stock market is totally chaotic, unpredictable, and just complicated to understand. But here's the truth, it's not the real reason behind those wild swings in the market. The wild swings in the market actually has to do with something a lot simpler than you might think: emotional cycles. These cycles are driven by two powerful emotions: fear and greed. Once you start recognizing these emotions at play, you will begin to see the market in a completely different way. Take, for example, 2008 financial crisis, the financial crash. It wasn't just bad business decisions that caused it. Fear was the driving force. People were scared, and the fear led to panic selling, which sent the market plummeting. On the other hand, look at 2020 tech rally when everyone was rushing to buy tech stocks. Greed took over. Investors were so eager to profit that they ignored the risk and the market skyrocketed. But institutions, they know how to use the emotions to their advantage. The sad part is most investors don't see it coming until it's already too late. So how can you take advantage of these emotional cycles and make smarter investments? Decisions, it all starts with understanding something I call hidden indicator. It sounds fancy, but it's really quite simple. The hidden indicator I'm talking about is retail investor segment. This just means your regular people like you and me feel about the market. When most people are feeling euphoric and excited about a stock, that's actually the time to start thinking about selling. On the flip side, when people are feeling terrified and thinking the market is going to crash, that's often the best time to buy. I know it sounds counterintuitive, but the data backs this up. Let me give you a real life example. Remember what happened in 2021 when the meme stock on Reddit, thousands of retail traders piled into stock like Camp GameStop and AMC, all hoping to make quick buck. A month later, that market crashed by 40%. That's just one example of patterns that repeats itself over and over again. The retail investors, while enthusiastic, are usually the last to know when it's time to get out. So yes, retail investors are actually in a pretty good signal of when things are about to take a turn. But here's the thing, timing is everything. If you wait for the news headlines to hit, then you miss the opportunity. By the time the media is talking about something, it's often already too late. The trick is to pay attention to the market when no one else is. This is where your advantage lies. Now, I'm sure you're wondering, how do I start using this to my advantage? Well, let's break it down into three simple steps you can start using today. First, keep an eye on tools like fear and greed. Index. This index is an easy way to measure public emotion around the market. When the index shows that people are getting greedy, it might be a time to sell. But if the index shows that the fear is setting in, it could be a great time to buy. Second, make sure your investments are diversified. Don't just put all your money into the popular stocks that everyone else is buying. Think about sectors that are often overlooked during the hype, like utilities and healthcare. These sectors are less volatile and tend to do very well even when the market is swinging wildly. And third, use a strategy called dollar cost averaging. This means you invest a fixed amount of money regularly, regardless of the market's ups and downs. This approach helps you avoid making emotional decisions and prevents you from buying too much and when the market is high or selling when it's low. Ultimately, the secret of becoming a successful investor is mastering your own psychology. The stock market is a reflection of a human's emotion, And when you let emotions guide your decisions, it can get ugly very fast. Real winners are the ones who stay disciplined and stick to their strategy, no matter what the market is doing at that moment. So there you have it. The secret Wall Street won't teach you, recognizing emotional cycles and understanding how to act on retail investment sentiment could change the way you invest forever. If this blew your mind, hit the like button and make sure you subscribe for more uncensored financial truths that will give you the